Commodities. Taking a look at the week, where we are for the week. Let's just start out by taking a look, see where we closed. May corn closed up 8.5 cents this week, an inside week from last week. We've seen higher lows, higher highs. We were able to close it at 3.62 and a quarter. May soybeans closed just a penny and a half lower on the week, right below 9.20 in the May contract as well. We did see an early high in the week in the Sunday night session. May wheat, the loser this week, down almost 16 cents at 4.60 in the May contract. Over in the livestock markets, April cattle up $1.40 on the week. Closed it at 134.37. April hogs down almost $1, 97 cents, 97.5 cents on the week at 66.82 in the April contract. The dollar, still trading at the time of this broadcast, is looking to close a little bit weaker as well, somewhere around that 94.30 area. And that's right down here at the bottom end of the support levels we've seen actually all the way through 2015. So the dollar trade is certainly something to keep an eye on when it comes to these agricultural markets. When we take a look at the corn market, we were able to bounce 12 cents or so off the lows from last week's stocks and acreage report, where we came out with that very large acreage number. Stocks was a limiting factor in the trade, but certainly the large acreage caused the sell-off. And we've been able to bounce it every day since then, closing higher out. Taking a look at the cash bids and basis throughout the country, we're seeing the basis weaker, pretty much in line with the larger stocks are. As you head out west in the northwestern part of the Corn Belt, the weaker we are on basis. And as we move into the eastern part of the Corn Belt, out into Indiana and Ohio, we're starting to see a stronger basis being reflected there as well. Interesting enough, we are seeing the spreads firming. We are seeing the July coming in on the May. And this suggests that there's probably a little bit of ownership trying to take place by the commercials and or lack of producer selling as well. With these sales, with last week's report, we've certainly seen the cash selling being limited, and I think that's where we're seeing some of that basis, or the basis play in effect, as well as the spreads coming in as well. So that's something to keep an eye on over the next couple weeks. Managed money is projected to be short somewhere around 150,000 contracts still. That is a fairly large short position going into the growing season right now. Certainly weather is going to be the driver in this forecast, the forecast over the next 2-3 weeks. As we start rolling into next week, we're going to start taking a look out into the end of April as far as planting conditions, and or taking a look at that weather to see how quickly, if we can get the corn crop planted in a timely fashion. I suspect that that'll be the driver next week. Certainly this 350 area has provided some resistance in the front end of the corn contract going back to the fall of 2014. We've been able to bounce off at 346 3/4 several times since that time frame, coming back up through it from that 318 low out again in the fall of 2015. So that looks like that will be some technical support to keep an eye on. Certainly rallies are going to be capped with cash selling here over the next several weeks, maybe next several months. It just looks like this corn trade's stuck in the mud for the time being. Beans a little bit more volatile, a little bit wider range. We did see the high on beans early this week following last week's stocks and acreage report. We were unable to take out those Sunday night highs, and actually we did close a little bit lower on the week. So as far as the cash is concerned, you're seeing the same thing in beans as in corn. You're seeing the basis widen out west in soybean meal and in soybeans, and it's a much firmer basis as you move across into the eastern corn belt. One thing to keep an eye on with soybeans, especially in the Sunday night session, and early Monday morning, we're probably going to be sleeping, is when the Malaysian palm oil stocks come out. As the trade is concerned about the lack of edible oil in the Asian market, that's where we've seen a record amount of longs piled into soybean oil. And soybean oil, along with the weaker dollar and the stronger currencies in the real and peso out of Brazil and Argentina, has caused a tech-driven soybean rally where we've been able to bounce this thing 65 cents off the low. The managed money is probably holding somewhere around a 75,000 long. That has been a quick turnaround from the short position they were holding just several weeks ago. Again, that Sunday night high is going to be the key for the tech drivers here, along with planting weather. Keep in mind, planting delays in corn certainly are not bullish beans from a fundamental perspective. We do get next week's supply and demand report coming out. Not expecting much for either corn or beans next Tuesday. More eyes will be on that world production number to see what we do with South American's crop. There is a little bit of concern about dry weather in the Brazil areas. Their safrinha corn crop is a couple weeks away from pollination down there right now, so that's something to keep an eye on. And there are some weather bulls concerned about Argentina's harvest due to too much rain there as well. Taking a look at the livestock markets, let's start out with cattle. Very volatile week in cattle. We've seen a limit down trade earlier this week, Tuesday this week, only to bounce off it and actually close higher today. On today's trade, we were actually propelled, able to get that close for the week up for the week. Cash trade pretty much wrapped up this week. Nice to see it done during the week versus the weekends. 212 to 215 caught most of the Corn Belt cash trade, 133.35 in the South, and that's viewed as about $1 up on the week. So positive week in the cash trade. Boxes were down on the week for the most part. We did bounce up today. Some analysts are looking for a lull in this 214 area in the choice. We did close above 215 today in the choice. Let's see if we can get a little bit more support and or follow through next week on the boxes. Export sales have been were released earlier in the week. February export sales viewed disappointing. We were expecting a higher number in the month of February than what we had seen. So as we take a look at this market, we're basically steady over the last couple of weeks. Technicians are looking at that 124.80 area in the June contract. That's an area we're going to have to pop up through if we have any hopes of going up and testing that 130.31 area where we came down from a month or so ago. Again, we'll keep an eye on early weeks box trade to give us some direction next week. Taking a look at the hog market, April hogs are set. April futures are set to expire next Thursday, as the April futures and the cash index are coming in line with each other. So that's why we're seeing somewhat of a stagnant trade in that April contract. Actually, the April contract, futures contract, is coming down to the cash index. June hogs have been able to find some support down at that 78, 79 area. That's somewhat of a supportive technical area to keep an eye on. And I think it's pretty important to keep an eye on that cash and then basically the cash index as well, as once that April contract goes off next Thursday, you have June, July hogs trading at a significant premium to the cash. So one would hope that you see that cash holding firm, and or that maybe you could see a little bit pressure put on those deferred months. The kills still come in line as far as numbers are concerned, and actually weights kill weights have not backed off. Actually, they were up a little bit over the last couple of weeks. So something to keep an eye on too is how current are we in the industry. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525, or check us out on the web at biscommodities.com.